Is home equity on your holiday wish list? Well, stick around and find out if you're going to get it this year. Coming up next. Hey RT family, Ryan Reynolds here with Keller Williams Consultants Realty and your December 2024 real estate market update. So what's going on here in December of 2024? Well, this is the first video that I've published since the election. And so a lot of things have changed and obviously we know the outcome of the election. As you might expect, of course, since you've been studying my previous videos, real estate activity has actually picked up since the election. And that was to be expected because it said so in the previous videos, but also we'd seen that in years past. Anytime we have an election, there's lots of uncertainty. Before the election, things kind of slow down, but then right after the election, things open up. So not to be unexpected, but it's kind of good to see that the predictions are coming true. Now today we're going to talk about three different things through the lens and from the perspective that we normally do. And that is going to be inventory. Where is the inventory at today? Number two is going to be what are the interest rates doing, the mortgage interest rates based on the 30-year fixed mortgage. And the fourth thing is where is the median sales price of homes now compared to where it was a year ago? And are we making more this year than we were last year or not? So let's go ahead and jump into those now. So the first thing we're going to talk about is inventory. Inventory is important because without enough inventory, it really hampers the market's ability to have enough transactions to satisfy the demand. And when you have low inventory and high demand, that typically pushes pricing up and makes things more competitive. Now, if you listen to the national news, things have definitely slowed down from where they were off on their peaks post-COVID. However, they're still strong, and especially here in Central Ohio, they're pretty strong. In fact, right now we are actually down 8.9% month over month inventory. What that means is from November of this year compared to December here, we're down about 8.9% inventory. That might be pretty typical, although last year it stayed pretty flat and maybe even went up just a touch. But now when we compare this year to year's numbers, year to date over last year's numbers, we're actually up 41%. So the good news is we've got more inventory and that will loosen up the market a little bit and allow some buyers to negotiate maybe a little bit. Although it is still a seller's market, we're sitting right about 1.8, 1.9 months of inventory, and a balanced market would be somewhere in the 4 to 6 months range. So still in the seller's market territory, and frankly, don't expect really to come out of that. And I will talk about a little bit more here soon, but I'm expecting next year to be more of a stronger seller's market. And so there's a little bit of opportunity now with the extra inventory available that if you're shopping for a home, you might actually have a little bit of negotiating power and a little bit of time to make a decision. So that's inventory. The next thing we're going to talk about are interest rates. Now, good news on interest rates is if you look at the graph here, they were up around 7, a little over 7 actually, and then they dropped down pretty sharply right after the election. Now, that necessarily isn't because of who won, but because the election was decided and there was some uncertainty taken out of the market. And so since then, though, it has actually kind of come down even more, where today, it's actually bounced around a little bit, but today interest rates are sitting right around 6.75%. And that's on a general 30-year fixed mortgage. I'd like to see that trend continue. And based on historical trending I've looked at, I'm expecting interest rates to keep coming down just based on the patterns and also based on some of the numbers that we've seen from unemployment and as well as the jobs numbers. Now, the last thing we're going to talk about real quickly here is the median sales price of homes. And so what I do is I look at the median sales price of all single-family homes in the greater Columbus area. And the grand finale here today, because I'm making a short video, is that we're up 4.9%. Now that's actually an acceleration over the last couple of months. We were around 4.6, 4.7. So we've come up and actually, so I'm seeing prices accelerate a little faster, even upward more than they were last month. So almost 5% increase. To put that in perspective, in a normal market, we're going to see about a 4% annual increase across the board. Now, this is a far cry from the 8, 9, 10% increases we saw just post-COVID, but it's also better than the average. And so with the market kind of now expecting the economy actually to pick up even next year and interest rates to come down, I expect that pricing will continue up at that rate or stronger. So that's all I have for you this month. If you have questions about your specific situation, reach out and we'll make a custom solution for you. Again, my name is Ryan Reynolds with the Ryan Reynolds team at Keller Williams Consultants Realty. As always, it's unlimited opportunities and exceptional experiences.